Welcome to the Power and Market Report. I'm Albert Liu. I'm pleased to be joined now by Louis James, a senior investment strategist at Casey Research. He's also editor of Doug Casey's International Speculator newsletter. Louis, thanks for joining us all the way from Belarus. Welcome to the Power and Market Report. How are you?
I'm well and happy to be with you today.
I enjoyed your recent seminar, the Cycle 2015. And would you like to tell us a little bit, just briefly, about that program? I noticed Rick Rule did a talk, Doug Casey's a regular there. It's a really great program. It just finished up, but I think people can still enjoy the videos from the last seminar. So why don't you tell us a little bit about that?
Sure. That's a labor of love. It's really my hobby, is teaching economics and entrepreneurship. It started in Eastern Europe. That's partly why I'm here in Belarus right now. But it's spread to students around the world. We're doing it online now, and it's open to students of all ages. So if I can quickly mention, anybody who's interested can go to cycle.liberty.me, and the recordings are there, and they're free for anybody who wants to check it out. The basic idea is entrepreneurship, freedom philosophy, a little bit of self-help, if you will, putting these ideas into practice in your own life. And it's my way of recharging my batteries in between kicking rocks underground all year long for Doug.
Okay, wonderful. Let's talk a little bit about those rocks. The resource sector has just, are we in crisis mode? It just seems things have gone from bad to worse. Commodity prices are crashing. And it would have been easy to conclude, or quite reasonable to conclude, that at the end of 2014, that the pain would have been over, but it has not been like that. It's continued through 2015. We've seen at times over 30% decline in prices year to date this year. So what is your take, first of all, on the pricing? Do you think that we are nearing a bottom in some of these commodity prices?
Well, a couple things. And one is, I have to say that for commodities in general, there's no real indication of a bottom to me. It doesn't look like we bottomed. Certainly oil is flashing a lot of warning signs for going lower, with China slowing, or the growth of China slowing, and it's still growing, but it's slowing, decelerating, and the troubles continuing in Europe and other places. The US is not the world anymore, if it ever was. And so I can't say there's a lot of reason to be generally optimistic about commodities bottoming soon. Now, they may be at or near bottom, but that doesn't mean that they're going to turn up. We could have a long U-shaped bottom as opposed to a V-shaped bottom, or they could go lower. I don't think anybody can tell you right now, and if they do, you should be very skeptical. Now, the precious metals, of course, are different. They are commodities, but they're also financial assets. The safe haven value too, and there's enough scary stuff going on in the world that they could easily depart from the trend of other commodities at the drop of the hat. And we have seen that at times. We've seen that in the Ukraine crisis. We've seen it more recently. I doubt it's coincidence that gold had a very good day after people realized that the San Bernardino attacks were a terror attack. This seems to have forced a lot of short covering on the gold side. So gold and silver, a bit different from other commodities, but generally I have to say, I'm not sure I'd come out and say I'm actually bearish on commodities, but I'm not optimistic that we're going to see a recovery soon. And to go to the kernel of the point you brought up, you mentioned Rick Rule earlier, and one of the things that Rick tells us to look for in a bottom is full capitulation. And I have to say, as bad as things have gotten, it seems like it can't get any worse. But I can't say that we have full capitulation, because people are still able to raise money out there. There are a lot of penny stocks that have nothing, and they're not able to function at all. They're working out of their grandmother's basement or something. But there are plenty of resource companies that have the goods. They're even in production, or they have advanced projects that have demonstrable merit, even at current low prices. And those guys are able to function. They're able to either make money or show that they can make money and raise money in the markets. So I can't say that we've had full Rick Rule capitulation yet, which would be one of his signs of a real absolute bottom.
Yeah, it seems to be what I'm hearing out there that as bad as things are, they can get worse. Uh, these prices are really taking their toll on some of these companies. We had the big Glencore scare not long ago, but it's not limited there. We've had dividend cuts now, Freeport, McMoran, Anglo American, Kinder Morgan.
Kinder Morgan, yeah.
We had some good days, many years of increasing dividends, lots of capex spending, prices continuing to go up. That was really fun. Now it's the reverse of that. It's not as fun. Uh, First of all, do you think that the cuts in the dividends are done? Let's talk about these industrial metals. Are we done with that?
No, not by a long shot. I really don't see how anybody can make a credible argument to me that the cuts are done until we see that turnaround. If things can go lower, things can go worse. I mean, Kinder Morgan is a great example. It's a company, it's not even a producer, right? As a midstream company, the price of the commodity itself, oil, shouldn't directly affect it so much. But the whole sector is down, and their dividend was really unsustainable until things turned around. So I think they did the right thing. I think they did the prudent thing, and the market punished them for it. But that doesn't mean it wasn't the right thing to do. But can it get worse? Yeah, there are plenty of people out there calling for $20 oil. If that happens, even midstreams, they're going to feel it. And some of them will have debt covenants that come into play at different prices. So even if you get paid the same amount for transporting your, LNG or whatever you're doing, the prices do affect you. So by all means, I think we're going to see more of these things. And you say we had the good times, but the irony is that for the big companies, they enjoyed the good times, but the shareholders didn't really. They bloated their budgets. They started making unreasonable dividend promises. They started spending all this money like commodities could only go in one direction. And we never really saw the sustained improvement in bottom line, particularly the gold majors were amongst some of the worst companies in taking this wonderful windfall of higher gold prices. I mean, remember when $1,000 gold was something way up there we hoped to reach, and then it went up to 1,500 and stayed there and went higher? How come these guys didn't make money? And what on earth were they doing, raising their dividends when they weren't consistently profitable? And not all of them, of course. But I think, the piper's getting paid his due for, decisions like things can only go up. And the reverse is unwinding that now. And that's what we're seeing. And there's no reason to believe that's done. Ironically, the junior producers that have profitable margins, even at low prices, in many ways are in much better shape because they didn't have the luxury of taking on these massive amounts of debt. And they never bothered with dividends. They weren't in the place in the market to be promising people dividends.
As bad as a dividend cut was, a second dividend cut would be just catastrophic for some of these companies, don't you think?
If you have cash flow, good cash flow, if the company's actual survival is not in danger, are you going to risk that, drain your treasury because shareholders won't like the dividend cut? I mean, yes, it's going to be painful, and yes, your share price may go down. But if the alternative is to drain your treasury and actually put the company at risk, you have to do the right thing. And the rational investor out there, I think there's one or two on the planet, should recognize that.
Let's move on to oil. Oil again is an ongoing story. Again, no relief in sight. I'm wondering what your opinion is of the largest players, the largest oil companies. Is their dividend in jeopardy? I'm talking about ExxonMobil, Chevron, those big players. They're yielding quite high right now, and in a normal economy, the way things are going, I would say 8% is reasonable given the demands on capital. But in a post-QE world where yields are non-existent, does it make sense for them to maintain 8% or more yield, or are they going to be cutting that? Because the stocks have been hurt quite severely.
Right. Again, I have to say that the overall trend for that subsector is telling, and it's where we should take our guidance. And you've got a lot of the big producing regions, not just companies, but regions. You've got Russia, and you've got parts of the Middle East where they have huge spending commitments that require them to keep going. And look at OPEC. They've basically given up trying to cap output. And with Russia in the difficult shape that it is since the Ukraine crisis, they need that money. They're not going to cut output. Nobody's going to cut output. Everybody's trying to hold on to market share. This is really difficult for companies struggling under current circumstances because it can get worse. So I don't have a crystal ball here, and I should be forthright with the audience and say that the major oil producers are not my main focus. My greater focus is on the junior side of things. So I won't claim to have looked deeply into the details of ExxonMobil's financials. But my sense is, with the sector, flashing as many warning signs as it is, the sanctions coming off Iran, all these big producers really unable to cut back production. It's very hard to see things being sustainable for the private companies of the world out there that have promised shareholders that things will keep on.
Okay, so let's talk about something that you do know very well, and that is the juniors. What have you been writing about lately at the International Speculator?
Well, the sweet spot, clearly has to be the profitable producers right now. The market is very impatient with any exploration at all, or even advanced exploration and development stories where the projects are well studied and have good feasibility numbers predicting high economics. Even those stories are having trouble gaining traction, though I think the best of the best are still holding on. They're not penny stocks. They have some value. But who knows what will happen, and who knows how they'll be able to finance under current market conditions. Those have to be given a higher speculative discount. But the producers, the ones that are in production now and making money now and can credibly claim to be able to make money at even lower prices if gold drops down to 1,000 or less, that'll be devastating for everybody else. But those guys, I think those are the opportunities. Because if you have a scary event like the psychological impact of gold breaking 1,000, but you have a mine out there that can work at under 1,000, and there's some that'll work down to $800 an ounce. That could create a fantastic opportunity. I won't say the shares can't go lower from here. Obviously, if gold goes up, they do great. They're making money now. They'll make even more money if gold goes up. But if we get another big scare, particularly an important psychological threshold like $1,000 gold is broken, you could see the companies that are still profitable, still good companies, even at those levels, sell off of everything else and create fantastic buying opportunities.
I was just going to ask, do you think that the sector overall is hated enough yet for those companies, those profitable companies, to be trading at an attractive discount to what you believe their intrinsic value is?
I think it's divided. We have seen a real bifurcation in the market. It really actually started in 2008 and has gotten worse since the crisis of 2008 saw a significant separation of the wheat and chaff. Then there was euphemistic happy times again up through the big top in 2011, later for oil. But ever since then, the slide has been more and more separating the haves from the have-nots out there. And the haves, like I was saying before, we don't have complete capitulation. The haves are still able to gain traction. They still have some kind of market valuation, above dirt nothing, and they're able to raise money if they need it. Creative financing is going out there, some value accretive mergers going on out there. There's still options out there. So I would say, I can comfortably say, I think that for the obvious quality plays that are on sale now, there's real value in investments available, where you can look at book value, or you can look at NPVs of projects and book value, and look at the enterprise value right now and make an actual value argument. If for companies that you can do that, it doesn't matter where the bottom is. If it's undervalued now, it's undervalued now. And if they're producing and they got the cash flow to continue, that will correct itself. The odds are stacked in your favor at some point. It's a patience game, but at some point, the odds are in your favor. So in a way that addresses the bottom question, the valuation, but can things go lower? Can they get more attractive? Sure they can.
I'd like to ask you a question about your personal philosophy toward risk. You go out in the field, you look at different companies, assessing their value. You sort of do a this versus that, a differential analysis, right? Go for the high quality producers now over the speculators. These are differential assessments. But in the market, what you see is a lot of the movements are driven by macro eco factors that sort of, they're all encompassing. And so if you do a differential analysis and someone goes ahead and makes a directional bet on gold, they're at the mercy of the Federal Reserve, at gold speculators and whatnot. What's your personal philosophy toward managing that risk? Do you put on long-short strategies? What do you do, or do you just use only highly speculative funds for this type of thing?
So there's a couple levels and ways to look at this, and within the letter, I've got 10,000 monthly readers, and I need to be aware that different readers have different risk-reward, perceptions, appetites, and so on. And so I'll offer different opportunities for different readers, and I'll tell them, this one's very high risk, or this one's deeply undervalued now, almost. There's no sure thing, right? But looks very good going forward, and allow them to make that determination for themselves. Personally, I'm young enough, I guess, that I'm still more in the wealth generation rather than the wealth preserving part of my life. So my personal appetite for risk is pretty high, and I'm willing to go long on speculative, even earlier stage exploration stories, because I understand that my chances at a 10-bagger or some major wealth-creating event are higher with the higher risk plays. And the rewards can be so spectacular that they amortize my losses on the ones that don't work out. So what I'm saying is, personally, I am willing to lose money on more investments than I make money for the chance the ones that are winners are so big that they outweigh the losers, if you understand what I'm saying. That's my personal preference. But in the portfolio, I present a variety of options, a spectrum, if you will, to allow people to choose their own risk tolerance level.
What is the lowest, I guess, reasonable expectation of gain that you personally are willing to consider? Is it 5 times, 10 times on a risky investment?
I'm not sure I have a hard number on that. It depends on the time frame and depends on it's risk reward. It's never just risk or just reward. It's risk reward. So if I see something that it might only go up 20, 30, 40, 50%, for me, that 20% gain is a very small gain in my book. I'm looking for much bigger gains within 12 months. But if something looks like a real no-brainer, and maybe it's only 20% gain, but it's almost a sure thing, or as close to a sure thing as is possible in a speculative universe, then I might go for that because I feel highly confident. But if I'm taking chances, I want a shot at a 10-bagger, and I'm unlikely to take a chance unless I see at least a double in it.
Okay. With the time we have left, Louis, I want to talk a little bit about what's going on in Puerto Rico. You actually moved there somewhat recently, and so I thought of you immediately, even though I know you don't consider yourself an expert in government finance, so I appreciate your willingness to even talk about this. But I really wanted to get a man on the street perspective, especially someone with your philosophical bent. So what's going on in Puerto Rico sounds a little bit like what was going on in Greece back in 2006. Basically, you see they racked up a lot of debt. I imagine the place is just a bureaucratic nightmare. The debt to GDP now is, I think it's over 100%. That's why I say it reminds me of Greece back in 2006. After that, the productivity just kind of goes down the drain, and then you see what happened to Greece. They just can't get out of the funk. So, what's your perspective on what's going on, first of all, in Puerto Rico? Just at a high level.
I understand the question. So first and foremost, it's real, and you can see it. The statistics show the biggest out-migration, I think, for some decades. The number of people leaving is scary, and the worst part of that is that the people leaving are basically the middle class, And so you have more people who depend on the system staying because they don't have the means to leave or don't see the prospects. You have people paying the taxes staying. So it becomes a more predatory environment, which is a little bit alarming, socially speaking. That said, it's not quite the downtown Detroit auto sector environment that it's often portrayed at. It's kind of funny. You'll see reports about Puerto Rico. You'll watch 5 YouTube reports, say, on the crisis in Puerto Rico. And 4 of them will show the same street with all these boarded up windows. The camera crews have to drive around and look for the most desperate street with lots of boarded up windows. Because the reality is, most streets don't have boarded up windows up and down the street. There may be a business that's closed there, but on the same block, you'll see a brand new restaurant or something else. So, yes, they are basically bankrupt. They are looking at defaults. They just averted a default on December 1st. An important payment was made, but they've made it clear that they do not have enough money to pay what's coming up, and they're picking and choosing what they're going to pay going forward if they can't renegotiate these things. So the problem is real. It's ongoing. But it's not that the government has no money. They have some, and they have revenue, and they just have to decide, what are they going to do with it? Unfortunately, during the FAT times, they made lots of social promises, lots of expensive programs. As you say, from the philosophical bent that I have, these were ill-advised. They discourage productivity. The welfare situation there is really sad, and that's a very long conversation we don't need to get into, but it's been devastating. And if you cut back on those benefits, people don't like it. They don't vote for you. But if you let the lights go off, they like that even less. So I'm not worried about a Mad Max scenario where it's anarchy on the streets and chaos and the lights go out and nothing works. There's going to be picking and choosing as to what gets funded, what continues to go. And here's the interesting thing, what you said about comparing it to Greece. The Germans made that joke, the finance minister joked that they would trade Puerto Rico for Greece in the EU if we gave them a chance. But there's a big difference in that Greece can leave the EU. Puerto Rico really can't leave the United States. This was settled with very large gunboats more than 100 years ago. So it's stuck. And it can't print its own money. It uses US dollars. And it can't pay its bills. So what's it left with? Whether they like it or not, whether they're socialists or Republicans or communists or anything in between, they have no money, they can't print more, and they can't leave. So they're cutting spending. So here's a really interesting thing. I'm not recommending anybody make a contrarian bet in Puerto Rican bonds, as some people have done and been burned on recently. Who knows where the bottom here is either. But I am thinking that there's an opportunity here because the government is actually cutting spending. And these aren't Washington-style cuts where they decrease the increase and call it a budget cut. These are actually budget cuts, like reducing the amount of spending on various programs that are not essential. So if the government is forced to live within its means, you could actually see a very significant financial renaissance in Puerto Rico, much more than in other places that have been able to restructure and just sort of kick the problem down the road.
Okay, I just want to mention, did you actually use anarchy as a synonym for chaos? I'll give you a chance to correct yourself.
Yeah, common usage. I understand there's a difference between the two. And the political philosophy of anarchy is a very peaceful one, and it doesn't mean what most people think it does. But in common parlance, if you want to talk about a situation in which things really fall apart, that's the word that pops to mind. My mistake, well spotted. I understand where you're coming from, and I agree with the distinction.
Yeah, thank you. So, but more seriously, what things are they cutting? They're probably not cutting into pensions and that sort of thing. What are the cuts that you're seeing that you're happy about or that you're optimistic about?
One of the ones that seems inconceivable in other places that's happening there is cutting into funding for higher education, for example. I mean, this is one of those holy cow type things. Like, how can you cut spending on education? But not all spending on education is what you might think of as core spending. There are a lot of so-called educational programs that are really benefits for administrators and perks that go along with that business. And some of these things are being cut. And a very interesting thing is happening in public discourse here. If you look at the letters to the editor in the Puerto Rican newspapers and so on, it's striking that people from all different persuasions, political parties, ideologies, backgrounds, everybody agrees that the government actually needs to stop spending so much money. They understand the bank account's empty. You can't just keep writing checks when there's nothing there. You have to stop spending. But of course, everybody writes in to say, but my favorite thing shouldn't be the one cut, right? You know, my education program, or my helping for the poor, or my medical assistance, or this, that, my thing that I want or is important to me. This should not be the one thing that is cut. And that's the tone of all these letters. And it looks like a great deal of disagreement, but it's really significant that they all start with, yes, we understand we need the cuts. And so I'm not saying that everything's going to be fine very quickly, but clearly there is political will there for some hard decisions, and that's what we're going to see going forward.
Okay, one last question for you, Louis. There's a proposal by the Republicans here. I don't know if you've been following the discussion here, but they want to give Puerto Rico access to Chapter 9, or they want to bail them out. And one of the places they're looking for funds is actually funds that have been allocated for Obamacare, which of course is bad news for us here, because that money is going to have to be replaced. And you know, medical is already so expensive here. So I'm not happy about that.
Well, you corrected me. Obamacare was bad news for you there too. So
oh, absolutely. No. I'm saying that they're going to need, if they spend the money on Puerto Rico, they're going to have to come to us for more, because Obamacare is not going anywhere.
Or maybe it stops working and we manage to get rid of it, kill it financially if we can't kill it by vote in Congress. Could be a silver lining there.
I wish that was the case. I don't think that's...
Being an anarchist, I, of course, don't believe in Chapter 11 or 9 protections. I don't think people should be protected from their mistakes. And this, again, is part of the vice that Puerto Rico finds itself in. It doesn't have these excuses. It doesn't have these outs. So it's having to actually cut the budget in real and significant ways. And in my view, that's a good thing. And if it's forced to live it within its means, then it could actually proceed on a much more stable financial basis. I mean, wouldn't this be funny if 10 years from now, Puerto Rico was the most fiscally sound province or area of the United States? What a riot that would be.
It could be.
I'm not necessarily predicting that, but that could be a consequence of the government actually being forced to live within its means.
Could be. I think that would be a good thing. But the bailout talk has begun, and here's where my question was going, Louis. People who want to bail out, whether they realize it or not, are basically advocating a closer relationship with the U.S. because those funds will have strings attached. At a conference, one of Doug's Casey's conferences last year, I asked him, only half as a joke, which do you think would become a state first, Iraq or Puerto Rico? And given what's going on, got a good laugh, but given what's going on, I think Puerto Rico is the correct answer. So are you concerned that basically the Puerto Rican government going hand in hand to Congress is going to result in greater harmonization, perhaps statehood even, and put the promise that territory has made to investors like you, people who have relocated, going to put those promises at risk?
Yeah, to specify, people like me were given tax incentives for moving there, investing there. You know, I bought a home there. I'm not just pretending I live there. That's my home now. And I uprooted and replanted myself there for a reason. And if that goes away, you know, that would be unhappy for me. And frankly, statehood would be the very worst thing for me. But I wouldn't just dismiss statehood on that basis, because it's not all about me. I think actually Puerto Rico has great advantages of not being a state, and it would be a shame to see them give those up. I view the United States federal government as a bad deal. It's a protection racket of a very expensive nature, and I think Puerto Rico is better off with as little government from the United States as it can get away with. So I see opportunities there for Puerto Rico, as in I think the best thing for the Puerto Rican people would actually be independence. But actually that option isn't even popular in Puerto Rico anymore. The major options that most people see, it's almost a 50-50 split now between status quo and statehood. Independence really has no chance anymore. So that's not an option anymore either. So of the more politically viable options, I see status quo is the best for me and for Puerto Ricans. I hope they don't get a bailout. I don't believe in bailouts. I believe in facing up to your mistakes and paying whatever consequences are necessary to pay for them.
Right. And those mistakes extend to people who are creditors as well. I'm sure you agree.
Absolutely. Creditors deserve to feel pain for lending money to profligate governments.
Okay, let's leave it on that point. We're out of time. Louis, I want to thank you so much for coming on the show. I've really enjoyed your work over the years, especially the interviews you've done with Doug, so it's a real treat to have you on the show. And I hope you'll come back as both of these stories, the resource story and the story in Puerto Rico, develop. I'd love to have you back on again.
Yeah, let's follow up sometime.
All right, thank you very much. My guest has been Louis James, Senior Investment Strategist at KC Research. Be sure to check out their daily dispatch letter at kcresearch.com. And don't forget to visit powerandmarket.com for insightful interviews with the world's leading experts in economics, finance, and investing. Until next time, take care.